Hey everybody, it's Jonathan with Keyrenter. Hope you're doing well today. Thanks so much for checking out our quarterly newsletter here. As you can see, there's a button below this video where you can download a full copy of our 2024 annual real estate report talking about rental trends that we saw throughout the year last year in Austin, as well as a really deep dive into what's coming this year as well, looking ahead. So please download that, read all the details there. Let us know if you have any questions. I wanted to call it just a few details. I'm not going to talk about all the letter, but I want to call out a few different highlights that I think are important to note. Firstly, a few trends we saw from last year. Number one, just increased rental demand throughout the year, about 4% up year over year. So that's an encouraging trend to see that tenants continue to want to relocate to Austin. So that's a positive trend. Price points continue to hold flat. Unfortunately, we have seen this really true for about 3 years now, frankly. Where rental prices have not moved upward much. It's almost held dead flat for those years. Certainly a huge surge during COVID, but since then, prices have been fairly stable, even retracing a bit in recent months, where we've seen some prices start to come down a little bit and kind of normalize and have a correction there. Lastly, I'll just say this trend has been true all year and certainly continues now, as vacant rental inventory continues to be very high. It's an unfortunate trend that we've seen, primarily driven by folks that were trying to sell their home, could not sell, have pivoted to the rental market instead. And so we've seen that trend continue, and that makes competition pretty high for folks that are trying to rent their home. As we look out into next year, this year actually, 2025, we still think that renter demand is strong. That trend does not seem to be letting off the gas, which is good. We do think there's higher costs, unfortunately, operating costs that we have seen in terms of higher material costs, higher labor costs that ultimately impact the bottom line. And so we think that trend probably continues, and costs continue to increase, unfortunately. We do think as well that rent price points probably don't move a whole lot. They might even come down slightly. I don't think they're certainly not a crash coming, but could they retract even further and come down by a few percent? They could. It's possible. But I don't think there's anything dramatically negative there, but something to be prepared for sure. For us at Keyrenter, there's several things that we are focusing on heavily this year. Number one, just being proactive in our management approach. Something that we've built the business on, but it's not changing. We've just always found that it's very advantageous to get in front of problems before they happen, have a very proactive approach. So that won't change. I'll also say a focus for us is just doubling down on our local market presence. We've seen other folks into the space and try to run a business in this industry remotely. So maybe they're located in a different state, a consolidated home office somewhere else, but without really a very strong local presence. We think that's definitely not the way to go. And so we have just seen time and again that a local presence, boots on the ground here in Austin, is really what is the winning factor in the game. And so we will continue to operate that way. Continue to focus on cost controls, cost decreases where we can. We want to make sure that we're being efficient with how we're spending clients' money, particularly when it comes to maintenance costs. And so obviously costs are increasing, but we want to do all we can to try to find ways to save money. That's super important for us as rental owners, also for you as well. And then just maximizing returns, constantly focusing on the main drivers of why people own rental real estate. Of course, cash flow is one of those, but tax savings, value appreciation, there's lots of factors of what goes into making a successful rental experience. And so we want to focus on those things as a team moving forward. Lastly, I'll just close here with 4 different things that are just celebration points for us as we look back over last year, things that we feel like we did well, and so I want to mention those. Number one, we lease renewal rate. That rate currently is 72% across our portfolio. So that means basically that 72% of the time that we offered a lease renewal to a tenant, they said yes to that and remained in the home. And so it's always a focus of ours to prevent turnover. Vacancy is the silent killer, is what I call it, of rental success. And so we want to make sure that we retain good quality tenants. And so that does not happen by accident. It takes a lot of intentionality, hard work, communication to make that number true and to get a 72% renewal rate. So super happy about that. Coupled with that, our average tenancy, sort of doubling down on this point, our average tenancy across the portfolio currently is about 28 months. And so, more than 2 years. And that's a really good number. We want to push that even further, but on average, for a tenant to stay longer than 2 years is a definite win, one that we want to see continue. So we'll be focusing there. Enhanced rent collection, another focus of ours during this upcoming year. If you're looking back at last year, about 97.5% of the time we had tenants that paid rent on time every single month. And so that's a win for us, one that we want to even improve upon. 100% of our tenants pay rent online. That is something that's key for us in helping us to manage our rent collection process. And so seeing that we're able to achieve that 97.5% of the time, we feel like it's a really good winning number. And so want to improve that as well. Also, our low eviction rate. That's something we're proud of. We did 1 eviction across almost 800 properties last year. And so that, again, does not happen by accident. It takes a lot of hard work up on the front end, making sure we screen tenants really effectively, not bending on our screening criteria, but making sure that we effectively vet applicants that are coming into our properties, making sure that they're highly qualified, meet all of our criteria. It just sets you and us, frankly, up for success. And so we want to continue that. And so with that, we're going to be looking at enhancing further our application screening process to make sure that we combat things like rental fraud, for example, which are on the rise across the country. And so continuing to look at ways that we can get even better at screening potential renter applicants is something that we want to improve upon. So I'll close there. Again, please download the letter, read it. If you have any questions, we'd love to talk with you further. Thanks so much. Have a great day.